ActiveOps, which is a software company that helps like financial services businesses and insurers to manage their workforces and to do sort of complex tasks. Their shares have performed very strongly of late, and I think they had a well-received capital markets day. They now trade at quite a punchy 4 times sales. They're just profitable. But what's your latest view on this business?
I think this business is, you're right to say, it's performed well over the last few months, but it's performed well from a pretty low base. And the company has delivered quite strongly, actually, since in terms of its operational performance since it IPO'd in 2021. But unfortunately for them, they IPO'd pretty much at the peak of the market and suffered from the general derating of growth stocks in the period post the beginning of 2022. But they've just plugged away and carried on focusing on the business. And the big recent catalyst was numbers coming in ahead of expectations and seeing forecast upgrades, and also a pretty transformational acquisition that they made, which has really added to their recurring revenue base. The business is accelerating its ARR, annual recurring revenue, which is the basis on which these type of stocks typically get rated. We see a big addressable market, a great management team, a good product. This is a company that is not directly selling AI stuff, but is a beneficiary of that big structural move to AI, where its software and the information, the data, the control that it gives an organization can enable those companies to implement AI solutions to drive efficiencies. So it's an indirect beneficiary of the kind of massive AI boom. And for that reason, we think the momentum continues. And in that context, especially when you compare to either private market valuations or US valuations, 4 times recurring revenue, it's not that expensive.